it takes a lot of cash to get in the real estate game. It takes a lot of cash. So the best way to make a lot of cash is not a W-2 job where you're going to get paid every week. It's entrepreneurship where leverage can kick in and you can make real money. So I'm a huge proponent of starting a company first, worrying about making that money first, and then moving over to real estate. A lot of people, when they're interested in real estate, they think that most real estate empires are built by starting in real estate, just getting started with no money in real estate. And you see it all over social media, get started with no money down in real estate. If you actually study the real estate empires, the families in New York City, Chicago, Los Angeles, the families that own hundreds of millions of dollars worth of real estate, it almost always started through entrepreneurship, almost always. Francis Greenberger in New York City, we've all read his book, Risk Games. His family was in the publishing and book printing business, a big business, and Francis leveraged that into real estate. A lot of my friends, family entrepreneurship, family business, and when I say business, companies that have grown to 200 employees and created serious wealth each year, that's how major empires are born. But a lot of people get on social media, they're hanging out on Twitter, Facebook, Instagram, listening to my podcast, your podcast, whatever. They think that I have a W-2 job and I'm going to go straight from a W-2 job to become a real estate investor. And yes, you can. There's people who have done it. My friend has done it. Chris Powers, who you might know of, he runs the Fort podcast. His story is amazing. But for the most part, it takes a lot of cash to get in the real estate game. It takes a lot of cash. So the best way to make a lot of cash is not a W-2 job where you're going to get paid every week. It's entrepreneurship where leverage can kick in and you can make real money. So I'm a huge proponent of starting a company first, worrying about making that money first, and then moving over to real estate. And also the second half of that is just the transition that comes from the skill set. The skill set when you're managing and hiring and running a business and delegating, all those skills are directly applicable to managing and putting together real estate deals. There's people involved. You're going to need to make hires. You're delegating to keep the properties clean and maintained, and you're selling customers. So yeah, it's kind of a flywheel. Entrepreneurship into real estate is a flywheel, and I'm lucky enough to have benefited from that.
Yeah. So what are some of the key things that you focus on in terms of keeping the flywheel going? What would you say are the pieces that are crucial to get right? You mentioned hiring. Now obviously you have different structures. you don't take on maybe everything on a personal guarantee anymore. What are some of the crucial pieces that are really important to Nick Huber's success right now?
I think that a real estate career is a journey. At the beginning, you just heard kind of like when I was risk on. I was taking risk and acting what would be an irresponsible way to act now, as I act now. 70% loan on a brand new development and going over budget on a first development. That's not for the faint of heart. But now that I have something to lose and we're kind of in wealth preservation mode and okay, we bought $100 million worth of storage, we're managing it. We're in a different mindset of, hey, how can we use real estate to multiply our wealth snowballs, in a tax efficient way as we kind of look towards the future? It's not, oh, hey, how can we make a couple $1 million quick here? It's let's buy a property, let's manage it well, and let's hold it for a long time. And let's use less leverage. I mean, that's a huge part of it, is that in 2021, about halfway through, we realized, oh boy, this is going really well. We're making these properties a lot more valuable. We have a ton of LP interest. We can talk about how social media has been a part of that. But it was, let's get less bank debt, because all right, we got this net worth. We got this first building. We got 6 more buildings on top of that we bought in 2018 and 19 that are all, solely owned by me and my partner, and they're doing really well. And we're cash out refinancing millions of dollars. Let's figure out what could bring all this crashing down. And it's too much leverage and it's debt maturities. And so by halfway through 2021, we went from 65% leverage down to 60% leverage, down to 50% leverage. And the deals we're buying this year are no leverage at all. We're buying all cash just because bank debt is unreasonable at this moment. So yeah, I think the flywheel has shifted. At the beginning, it was risk on, let's get that money. Then it was kind of, all right, let's build the teams, let's build the business behind it, which we're good at. And now it's, hey, let's find a way to make real estate very sustainable long-term. Let's set it up so we don't have to sell it. Let's set up with the right management fees, which was a huge win. One of the number one decisions that we made early on in syndicating our deals is that we built in management fees to sustain our company if we stop doing deals. Like we can We can not do anything and we can keep all of our people at our company. Not many syndicators have that going for them. And also, I had a lot of reach for LPs. I had a big base of LPs. So we got to decide, like, okay, how do we want to position this? Like, we're running a company. It is a service to our investors. How are we going to position this? What type of LP are we looking for? And yes, there's LPs that ask you right away, what's your IRR? When are we going to sell this thing? How much capital can we make? What's the MOIC? Multiple on invested capital. What's the exit? There's other LPs that are like, hey, Nick, how long can we hold this thing? How can we not pay any taxes? And how can we reduce the downside? Like, a lot of times the incentives are not really aligned with LPs and GPs. A lot of GPs are encouraged to, hey, let's do deals and let's sell deals so that we can get our promote. And that creates a ton of loss that's in our industry with transaction costs and all the people that work on transacting real estate and just how expensive that really is. And then also the horrific tax efficiency of buying a building and selling it 3 years later, if you're not going to 1031 it or whatever, which is kind of hard when you have a massive amount of LPs. And when you, the GP, want and need your promote, you can't really do a 1031. So we said, all right, if we're going to build a portfolio that we're going to hold here for 10 years, and we can buy, $10 million or $100 million a year, whatever the market gives us, take opportunity as it comes. We can sustain our people in the slow times, which is right now, it's a really tough time, which we can talk about. Or we can really get aggressive and buy a lot of storage when things get good. What do we need to do? And ours was, hey, let's find LPs who want to hold on to property for a long time. They're not interested in IRR. They're not interested in flipping a property. They're not interested in paying taxes, and they want to just hold. They want to put money away. They want to make money every month, and they want it to multiply without exits, liquidation, taxes. So low leverage reduces the IRR. If you're going to buy a deal all cash, it's really hard to see a 10 or 12 and an IRR more than a 10 or 12, especially if you're not, projecting massive rent growth and big exit cap rates, low exit cap rates. So if you're going to be realistic about your projections today, we're looking at 10 IRR. Not many LPs are going to be pretty excited about that, but we're using zero bank debt, which reduces almost all of our downside. We're not going to lose this property. In what world are we going to lose this property? And then, we can kind of set up a structure to buy and keep the flywheel going in a different way. Early on, it was, hey, let's maximize returns. Let's get in this promote. And today it's, let's figure out a way to set this up so we can hold these things for a really long time. Hey guys, I have big news. I recently revamped my sales and customer service team at my self-storage company using folks in South Africa. Listen to this English accent.
Hi there, my name is Anton and I'm a sales professional from Gqeberha or Port Elizabeth, which is in the eastern province of South Africa. I've been in sales for about 8 years now with experience in hardware sales with some of the leading brands in the world, such as Canon, Panasonic, and more recently Red Bull.
Okay, now the surprising part. The person you just listened to is available for hire right now, and they're asking $9 an hour. If you want an introduction, if you want to hire this person into your business or at least interview them, send me an email, nick@sweatystartup.com, and I can make an introduction and offer you $1,000 off the recruiting fee. nick@sweatystartup.com.